Market review here, looking at what opportunities we have here going into our afternoon and then into the end of this week. We have this massive dollar strength trade, and this is a cyclical dollar strength trade. This is a monthly chart here. All of these little white ovals are dollar strength trades. They happen about every 3 years. 3 years 3 years down, 1 year up, and it just happens to correlate with some of the largest crypto winters, the crypto winters, excuse me, and some of the largest drawdowns that the markets have. And so we've been paying very close attention to this massive double bottom that we have been inside of since the beginning of this year. And it's incredibly technical as well, too. We broke a short, we had a pullback. We went to and through profit targets caused by long setups that we had now 2 Mondays ago. We went to and through the profit target of an extension. The extension traded once on Monday going into Tuesday, and then again going into yesterday. And as we were going into our overnight time frame, we had this long setup. Well, this morning, we broke through the opposing short setup here. It confirms the targets above, and that gives us a pullback inside of the 99.04 that we're watching for a squeeze actually in the negative correlations up into resistance. Now, what you'll notice here about the indices highs, let's just look at the ES. Look at the ES highs and lows here and how they were correlated with the dollar. The dollar has gone into a very dramatic negative correlation. So it's a negative 0.5. The 10 o'clock lows on Tuesday, those are the same as the 10 o'clock highs on the dollar. The dollar pulled back. The ES rallied into resistance. As the ES rallied in resistance, the dollar hit its extension. As the extension, we rallied away from it overnight and this morning and confirmed our targets above. The ES has broken its counter trend long from lows and has a 50% short from highs. The dollar has a long from our Thursday's lows to highs here. It leads us into a continuation of the trend. The dollar has a 50% short from highs to lows, leading us into a continuation of a weakness event. This is the dollar correlation. This is one of our leading indicators that is suggesting a continuation of our indices sell-off. Where's the next part of our leading indicators? Bank. Bank is inside of a series of shorts. Although it does have longer term support, it has confirmed its targets below by breaking longs. We broke longs from yesterday's lows to highs. There is a short from our afternoon highs to lows. What would that correlate with? Well, that's a very similar type of event to what we have now inside of the indices, with the exception of NQ, which we'll talk about here in a moment. The next measured move short to associate with bank, or the next resistance level that we're watching for bank to correlate with, is the 46.85.87. Moving on to the VIX. Might as well be inverse of the indices, right? We have the halfway back long for the year. Isn't that amazing? Targets are confirmed up at the 27.05. The inverse correlated downside profit targets on the ES are down at 66.42.25. The VIX just confirmed its targets above, and we're watching for another pullback. Now, there have been a number of pullbacks here as we've gone into our morning before we've now broken out of shorts. We had pullbacks this morning at 10 o'clock. There was a next measured move, a trading hours halfway back long that we had as we were going into the daily doldrums. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.